Okay, good morning, everybody. It's 10 o'clock. We'll call the meeting to order. Item 2 is to approve the minutes of the meeting of February the 12th, 2015. Motion been made. Are there a second? All those in favor signify by aye. Opposed, same sign. Ayes have it. Item 3 is receive the judgment for the month of January. Motion been made. Are there a second? All those in favor signify by aye. Opposed, same sign. Ayes have it. Item 4 is ratify the approval of the payroll for the month of February. Motion been made. Are there a second? All those in favor signify by aye. Opposed, same sign. Ayes have it. Item 5 is the approve the claims docket. It was in your packet. Motion been made. Is there a second? All those in favor signify by aye. Opposed, same sign. Ayes have it. Item 6 is approve the following applications for service retirement. What are they? 1, 2, 3, 4, 5, 6, 7? Move all the items. All the items have been moved. Are they a second? All those in favor signify by aye. Opposed, same sign. Ayes have it. Item 7 is receive the report of death and authorize the payment $5,000 death benefit and approve the continuation of the pension to the spouse. Motion been made. Are there a second? All those in favor signify by aye. Opposed, same sign. Ayes have it. Item 8 is receive the report of death and authorize the payment of $5,000 death benefit and authorize the Secretary to make the necessary changes to conform to the 2 following applications. Motion been made. And are there a second? All those in favor signify by aye. Opposed, same sign. Ayes have it. Item 9 is receive the report of death and authorize the Secretary to make the necessary changes. The motion has been made. Are there a second? All those in favor signify by aye. Opposed, same sign. Ayes have it. Item 10 is ratify the approval of the following termination of vested rights and receive a lump sum payment of their employee contribution account. Motion been made. Are there a second? All those in favor signify by aye. Opposed, same sign. Ayes have it. Okay, item 11, we have 2 items. Item A is the ERS pay plan for July 1st, 2014. Any questions on that? Yeah. Motion been made. Are there a second? Second. All those in favor signify by aye. Opposed, same sign. Ayes have it. Item B is the group sale agreement between the American Conference Center and Oklahoma City Employee Retirement System to hold the annual Oklahoma Public Funds Conference September the 23rd through 25th, Norman, Oklahoma.
Chair, I just had one question.
Yes.
It pertains to the guaranteed room nights, the type of rooms that are guaranteed. Are these? Is this typical?
Yes, it's my understanding it is.
Yes, it's typical, and we actually cut down the amount of rooms that we are allocating. Last year they used 100 nights, but that was a hard get to the 100 nights, so we backed it up, and we only have to have 80% of that night count that we have, so we feel we should be fine.
Okay, thank you.
Motion been made. Are there a second? All those in favor signify by aye. Opposed, same sign. Ayes have it. Item 12 is the investment consultant report, and Patty, you're up, ma'am.
Good morning. I think most of you know my name is Patty Carol-Zach, and I work with Jason Poulos at Asset Consulting Group. We have 2 items that we wanted to cover this morning. One is the February ASAP report. Hopefully you all have a copy up there. And then the other item is the overall, there were some questions at the last meeting regarding the overall allocation to emerging market equities. And so we've prepared a piece to talk about and discuss with you all regarding that. But first I'll cover the February performance report. And if you want to flip to the very last page, this provides an overview of the markets for the month of February and year to date. And when you look at this page, the very first column has the 1-month return for February, and the first thing you notice is everything is positive. So we had a complete reversal in February from what we saw in January. You know, as you might recall, January the equity markets were down around 2 to 3% in the U.S., and in February everything bounced back significantly, gaining what they lost in January plus some. So you'll see here the S&P 500 was up 5.75%, which represents the large cap equity stocks. The Russell 2000 up 5.94% for the month. The MSCI EFA up, just under 6% as well. And so strong rally in the equity markets in February. Within the fixed income markets, we saw the exact opposite of what we saw in January as well. In January, rates declined, and the 10-year Treasury declined around 40 basis points in January. And with that, the fixed income markets rallied and produced positive results. In February, rates started to rise again, and we saw actually negative returns within the fixed income market. So the Barclays Aggregate, which is the very last index on this page, down just under, or just shy of 1%, down 94 basis points for the month. And rates rose about 40 basis points, so we're almost exactly where we started at the beginning of the year. January 1, the yield on the 10-year Treasury was at 2.12%, and yesterday it closed at 2.11%, so almost back to even there. Looking at your overall portfolio, if you flip to page, the first page, you'll see the overall market value of the plans just under $700 million at $673 million. Looking at the overall or the underlying asset allocations, everything is in line with the targets with the exception of small to mid cap. Small to mid cap is slightly overweight. See 14.5% versus a target of 10%. We'll continue to work with the staff. I know last month that the small cap manager was used for cash flow needs, and we'll continue to work with them and make the recommendation that they use the small to mid cap equity managers for future cash flow needs. Help bring that back in line with the target of 10%. Looking at the overall portfolio results on page 2, you'll see the portfolio was up 3.3% for the month of February, and all of the underlying composites. So on this page here, on page 2, we have the underlying composites. So it's looking at the performance for the specific asset classes. So it shows you the performance for large cap equities, small cap equities, long short, private equity, international developed, emerging market equity, fixed income, real assets, which is your commodities and real estate exposure, and then cash. And when you look down the very first column, the 1 month, you'll notice everything outperformed the broad policy index with the exception of international equities. So it was a strong month for your overall portfolio. Looking at year-to-date returns, you'll see the portfolio is up $2.85 million for the year-to-date. And over the 1, 3, and 5 year periods, you're meeting that 7.5% absolute return objective of the 7.5% actuarial return assumption. So strong results there. Flipping the page to 3, show you the overall performance for the underlying managers. Really most of your managers have been performing very well, and your overall performance is very strong. Just to highlight a few, Intech has been on a strong run over the past 12 months, really. As a reminder, Intech is, it's not an indexed manager, but their outperformance or underperformance tends to be much tighter to the benchmark. So for them, over the 1 year period, up, they're up 15.4% versus the index at 14.9%. So about 60 basis points outperformance there. Had a strong February, and year-to-date results are good as well. Earnest Partners, your small to mid-cap value manager, also has been producing strong results. They were up 8% for the month of February versus the index at 4.6%, and over the 1 year period, up 12.7% versus the index at 7%. So very good results there. Long short equity, that's more of the hedge or the insurance. So you want that portfolio to really shine in the negative market, which it did in January. You want it to outperform or protect on the downside, and also participate when the markets are going up. And it did that in February as well. So their year-to-date return is strong. Harding, Loebner, and Von Tobel also both produced very strong returns over the past 1 year. And then when you look at your fixed income managers, Western Asset Management and Brandywine, they stick out. And they have the ability to invest in other fixed income markets that the index is not investing in. So they're investing in international bonds, emerging market debt, high yield bonds, And given the current market environment that we're facing within fixed income, that makes the opportunity set should help to broaden their performance expectations. And they've had very strong results as well over the past 1 year. The real estate performance, that's as of 12/31. That portfolio is valued quarterly, so that those results are as of 12/31. And commodities had a strong month for February, up 3.3% versus the index at 2.6%. Longer-term commodities have, as you guys know, have struggled a bit.
Yes, ma'am.
I noticed that, and I know it's been on here every month, on the small mid-cap equity, I noticed that Ernest Partners is, compared to a custom index, which includes Russell 2500. What was our reason for doing that as opposed to the Russell 2000?
The mandate changed several years ago, so if I had some reading glasses, I could read this fine print.
I know, it's very tiny.
But several years ago, the mandate changed from Russell. Thank you. It was July 1 of 2010. So it went from small cap to small to mid cap, and so that mandate was broadened. And so that policy index reflects the previous mandate and then combines it with the new mandate, because you don't want to.
Okay. So it has both of those?
Correct.
Okay, thank
So it's a
you.
more accurate representation.
Okay, thank you.
Any other questions?
Any board members have any more questions? Okay. Your next item is, you want to talk
Okay.
about it?
So we have this other page that says emerging market equity analysis. And as I mentioned, at the last meeting, there were some questions regarding what is the overall exposure to emerging markets, and I think more specifically emerging market equities. And so if you just flip to this very last page here, this puts everything in terms, we put together a chart that outlines what the current exposures are based on each of the underlying managers' positions. And so when you look at this, you'll see at the very bottom, the total fund, total allocation to emerging market securities is 9.9%. So that includes equities and fixed income. And I'm going to drill down here to show you how we got to that. Looking at the total equity exposure for emerging market securities is 6.7%. And the way we get to that is that you have Von Tobel and Wasatch, which are your two dedicated emerging market managers. 100% of their portfolio is invested in emerging market securities. And then we take that and times it by the weight in the portfolio, and you can see over the far right-hand corner that Von Tobel represents 3.3% of the portfolio, and Wasatch represents 1.3% of the portfolio. Now, Lazard and Harding Loevner also have the ability to invest in emerging market equities. And so we get information from them on a quarterly basis as to how the portfolio is allocated. And so as of January 31st, Lazard had 14.1% allocated to emerging market securities, and Harding Loevner had 14.8%. When you take that percent and multiply it by the assets or the weight of the portfolio, you get that it represents both of those less than 1%, almost around 0.5% of the overall emerging market equity exposure at the total fund level. K2 Advisors, which is your equity long-short manager, that's a global equity long-short portfolio. They also have around a 9.5% allocation to emerging market equity. And so that relates or translates into a 1% allocation. When we report on the emerging market exposure on the ASAP, the first page of the ASAP that shows you the allocations and the targets, we really view that as your dedicated emerging market exposure, representing Wasatch and Von Tobel. However, we do have some clients who want to look at this and know what their overall exposure is to certain asset classes. And so we can definitely provide this page on a go-forward basis in your quarterly report. And it'll help you monitor to see where you're at with an allocation to emerging market equities. I'm sorry, go ahead. Okay. So in the investment policy statement, the way the investment policy statement, so we take those target allocations, that's all based off your investment policy statement and based on the asset allocation work that we've done for you. And so when we model the emerging market equities from a broad asset allocation perspective, we're really thinking of dedicated emerging market exposure. We know that international, especially your two international managers, have the ability to invest in emerging market equities. So Lazard has the ability to invest up to 15% of their portfolio in emerging market equities, and Harding Loevner has the ability to invest up to 30% allocation in emerging market. But they're making that call from a broad asset allocation perspective, and so when we're looking at that from our asset allocation modeling, we're not including that in that 5% target. But we can show you, provide this chart and show you what their overall and underlying exposures are going forward. And then, for K2, it's your global long-short equity manager, there's no stated target in the investment policy statement as to how much they can have in any one country or region, or whether it's international developed or emerging market equity. They have the ability to invest based on their research and approach and process. They have the ability to invest in the different segments of the market. And it's a fund, and so there's no guidelines that any of their clients can place specifically on that fund saying we limit the emerging market allocation. So we know that there's going to be allocations to international developed and emerging market equity because it's a global portfolio. And the same within fixed income. You do have some exposure to emerging market securities. It's emerging market debt securities, but you'll see Western Asset Management, they have a 7.5% exposure to emerging market debt securities, represents just under 1% of the overall portfolio. The guidelines for Western Asset Management in your investment policy statement, because that's a separately managed account, says that they have the ability to invest up to 20% in plus sectors, meaning non-U.S. investment grade bonds. So they can invest in high yield, international, emerging market debt with a maximum of up to 20%. And then Brandywine is your global opportunistic fixed income manager, and there's no maximum per se as to how much they can invest in emerging market securities or international. That's predominantly an international bond portfolio, but the way they manage the exposures from a quality perspective is they have a stated average, stated weighted average credit quality that says that that the portfolio must maintain an A- credit rating. And so they approach it from a different perspective. They're not looking at it from a region or emerging markets or international. They're approaching it more from a quality bias.
Thank you very much.
You're welcome.
Patty, is this something that you all do just as part of your due diligence, that you're monitoring these kinds of things, like not just emerging markets, but to see if there's something that might throw up a flag with you that maybe we're getting overexposed in a particular asset category that's moving us away from our policy? Is that something that you all monitor and maybe have determination points where you might make a recommendation for some kind of a change?
Yes. So on a quarterly basis, we get the underlying characteristics from all the investment managers for all of our client accounts. And we're looking at that and making sure that the managers are investing the dollars on behalf of their clients in the manner that they say that they're going to. So, for example, if all of a sudden, and let's use this as an example, if Times Square, who's your small to mid-cap manager, started investing in international emerging market securities, we would have a huge problem with that and, talk to them. And their mandate is to invest in U.S. small to mid-cap securities. And so we look at that, on a quarterly basis.
So you're really monitoring that to evaluate the managers individually to make sure that they're staying true to what their commitment is as to how they're going to invest. Not necessarily looking to say, our intent was to be, have 5% exposure dedicated in emerging markets, and now we're creeping up to 15% because of something an active manager's doing.
Right. No, so we're looking, so we're very...
For both sides?
Correct.
Okay.
Correct, yes.
Okay.
Correct, yes.
All right, thank you.
Mm-hmm. Mr. Chair, if I may. Patty,
Yes, ma'am.
I think this is very good information. Randy, thank you so much for asking the question last month. I especially think the column on the far right is really what we need to be looking at, and we see that we have a very small percentage of those managers who are not primarily focused on emerging markets. So there's a small percentage of our portfolio invested in emerging markets. So thank you so much for this information, and Randy, thank you again for asking the question.
Okay. Any other questions?
Any other board members have any questions?
Okay.
Anything else?
Thank you.
All right. Okay, item 13. Any board members have any comments? Staff got anything? Citizens got any? I see no citizens.
I just want to make one comment because I don't think we do that enough. I just want to thank Renee and Debbie for all they do with the retirement system. I mean, there is a two-person office, and they are responsible for processing.
Almost $700 million
Right. And
of this
I don't-
fund, not let alone your
That's
other.
correct. And so I just want to publicly thank them for what they do.
Okay. Okay, with that, at 10:21, we're adjourned.